I made millions of dollars in crypto, and I've also lost millions of dollars in crypto, trading, investing, and looking back. Almost every major loss came from breaking one of my rules. And as a trader, investor, if you're going to be investing or trading it, you need to have a set of rules to follow, to abide by. And this will always keep you in line so that you can consistently become profitable and be profitable over the next coming years. Some of these rules are over leveraging, chasing pumps, not using stop losses, not taking profits. And if I could have gone back and followed all of these rules from day one, I would probably be a billionaire. So in this video, I'm going to show you the 7 mistakes that I have made, 7 rules that you need to add to your investing and trading arsenal as a crypto trader, or even investing and trading into anything, period. And the number 1 mistake that I have made that has cost me the majority of everything, I'm going to share with you guys exactly what not to do, and the 7 rules that you need to follow, especially as the bull market is about to start. You guys need to lock in on these rules. They are going to help you to make a lot more money and to keep your money. Number 1 is you need to take profits. Many of us have caught crazy trades up 5x, 10x, 20x. I don't know how many X's, but many of us have been in a position where we are up big and we never took profits, and that trade came all the way back down. And especially in the crypto market and stocks in general. But in the crypto market especially, that's how the crypto market works. Altcoins, they will pump very, very hard and then they will come all the way back down. Altcoins crash 90% every single cycle. A lot of coins and stocks or whatever you invest into, whenever there's a big pump, it will always come back down most of the time. So you need to take profits. You need to lock your profits in. And remember, when something pumps up a lot, like 5x or 10x, it's very likely once it starts to break down from that parabolic move, it's going to go down a lot and probably not come back up for many, many years. So if you catch a big move, take profits in it and look for the next thing. And specifically, there's a strategy that I use that has been taught to me from my father. He's been trading for 50, 60 years. And that is, whenever you are up 2x on something or 100%, pull out your initial investment and let that ride out. And then as it continues to go up, every single big pump, just take off a little bit, 5%, 10%. Always pay yourself, always take profits. And another thing you could do is if you catch a very big move, let's say you buy something that's up 20%, 30%, move your stop loss to break even so you secure that trade. So that means you can never lose money on that trade. So this is a part of taking profits. And the thing about it is, if you catch a move that goes up 2x, you pull out your initial investment, you're playing with house money at that point. So you have a free investment riding out and making profits for you. And that money that you made originally that you put in, you could put into something else and let that 2x then pull your money out. That's how you do it. You just keep stacking up your bread. You keep stacking up your account and growing your investment portfolio for free. So take profits. Do not let a winning trade turn into a loser. Scale out, lock something in, and you'll understand that you'll almost never sell the exact top. So you're never going to sell the exact top. Sometimes you might be lucky like me. I've done that many times. But the key is you want to buy low and sell high. When something is up high, it's overbought, start to scale out. Take profits, lock that profit, lock the profits in, because there's always another investment opportunity. When something goes up a lot and it's extremely overbought, it's extremely high, this is the time to sell. This is the time to sell. You want to be in this type of mindset. You don't want to be in the mindset where you want to be married to your bags and holding forever. These types of cultures and communities, those people do not make money. They just let their portfolio go up, come all the way back down over many cycles. The way to make money is you buy low and sell high, and you keep doing that over and over, and that will help you to make millions of dollars. Even if you started just like me with just $1,000, $500, I've grown my portfolio and made millions of dollars by taking profits over and over again. Number 2, always have a stop loss or an invalidation. For me specifically, a lot of times I do not use stop losses when I'm trading spot, but when I'm using leverage, you definitely always want to have a stop loss. But a stop loss doesn't have to be a physical limit order in the market or in the order book. It could be an invalidation somewhere. And I will show you exactly how you could set this up. But always have a stop loss. Know where you are wrong before entering. The goal isn't to avoid losses. It's to prevent one bad trade from becoming catastrophic. So I'm going to show you guys something. For instance, let's go to this chart here. We're going to look at Bitcoin here. And if we look at Bitcoin here, and this can be any stock, by the way, this can be any stock. And let's say your plan is you think that this is the bottom and this is where you want to enter, and you think that it's going to maybe go up to here or to here, whatever, it doesn't matter. You want to have an invalidation. So let's just say I put $100,000, and you can see that this level, this white line that I've drawn here, this is a key support. Whenever something loses a key support, it will usually nuke really hard. It will usually dump pretty hard and make a significant move. And it can also just keep dumping endlessly. So you want to have a stop loss or an invalidation, knowing where you're wrong, meaning this is where you will cut the trade. And here is the thing. Psychologically, let's just say we are in a position and it goes against us and it's going down, and it's going to go down a lot more. Psychologically, but naturally, I just want to be like, no, let me just hold on to it, or it could go up, something good could happen, or this catalyst is happening. Let me just hold on to it. But you watch it go down 90%. The thing is, if you have an invalidation, you limit your risk. So let's just say I have $100,000 here and I buy here, and my invalidation is going to be under this level here somewhere, under this support. If it loses this support, it breaks this support, then I want to get out of this position because it can significantly crash. Whenever you lose support, it can significantly crash. And that works with the upside. If you're shorting, same exact opposite thing. You want to have an invalidation, knowing where you are wrong. So my plan is that the price is going to go up. But if I am wrong and the price starts going under here and starts breaking under here, it can lose support and dump very, very hard. This wants to be my invalidation. So naturally, it hurts to want to take a loss. But if I just take a loss, let's just say I take a 5 or 10% loss here, I have now $90,000 and the market crashes 30%. Instead of me, if I just hold it and let it come all the way back up, if I would have just held it, my account would go from 100,000 to maybe 70,000 or 60,000 if it crashes 30 or 40% from here. But if I would have just taken the loss here, then re-enter to have the 90,000, I can re-enter here into 90,000. It goes up 40% and then eventually hits my level. I would have a lot more money. So when the support is lost, you have an invalidation, you're going to want to best cut it. But here is the thing. If you do cut something, let's just say we do cut something and it reclaims that support. It breaks support, we lose it, we take the loss, but it ends up breaking back above and starts looking strong and holding above and finding plenty of time and strength above that level. Go ahead and re-enter. Yes, you'll take a small little scratch, but you'll make up for it when the trade hits profits. So have an invalidation, have a stop loss, especially with leverage, because with leverage, if you're using cross margin, the market can go against you infinitely and wipe out your whole account. And there are instances where there are black swan events that huge crashes, 50%, 60%, 80%, 90% crashes can take place in minutes. So have stop losses always. So have a stop loss or invalidation. With spot, I personally do not use a manual stop loss most of the time. What I will do is I will have a mental stop loss. I will have an alarm set. And if it breaks and loses the level, starts to find strength under that level, it looks like it's going to crash, then I will go ahead and cut it. Most of the time, if there's a huge crash that happens very quickly, it's going to be a bounce back up quickly most of the time. So as a beginner, I think it's good to certainly know exactly where you are wrong. Know where you're going to get out of the position. When you are wrong of a position, you cut the position and then you wait for the next setup. So let's just say for here, we were wrong, it cuts down, then it starts to develop support, looks like a bottom, we think it's gonna go up, we go ahead and re-enter and we have another invalidation. And the invalidation is simply going to be, you have a strong support. If it loses that support, if it's closing daily candles, 1, 2 daily candles under support, it's looking very bad, there's just tons of bad news, go ahead and cut it. Go ahead and cut it, it loses that level. And it applies even on smaller time frames, 1 minute time frames, daily, weekly. All of these time frames are relevant. So this rule, if I'd have implemented, I would have made much more money. So having a stop loss, because you can always re-enter and you'll have more money to re-enter with. And eventually you'll make it back when the trade goes in your favor, which most likely will. All right, another very important rule, the number 3 rule, is never revenge trade. Always after a loss, don't immediately increase size trying to win it back. That's when emotion replaces strategy and losses can snowball. So revenge trading, this is something that applies to not only crypto, but any investment in the world. Any investing, any type of trading in the world. If you ever get into a trade and you just lose immediately or just in a losing streak, it's best to take a break, breathe. Naturally, we want to make that money back as quick as possible. But that very emotion will make you burn your account to zero. So if you caught a loss, you don't need to look for the next best trade to make the money back. Just chill out. Most of the time you will make more money by not constantly entering into trades and trying to make it back as quick as possible. You will make it back much quicker if you are slower. If you take your time, if you are patient and you choose only A probability setups, A plus setups where you have a 90% chance to win, 80% chance to win, 90% confidence, 100% confidence that you are going to win that trade, that is when you want to be trading. But if you are not sure, there's like 50-50 chance or there's like a 1/3 chance, oh, it might go in my favor, it might win. That's gambling. You don't want to do that. You want to have a real strategy. Before you get into investing or trading, you need to have a system and a strategy. And we, of course, do that in my private community. So if you guys are in crypto, you guys can follow my trades where we grow our portfolios every single year massively. In 2025, in 2024, 2025, I took my portfolio from one of my portfolios from $100,000 to nearly $3 million by buying low and selling high because I had a system and strategy in place. And I was playing that strategy perfectly. You guys can follow those trades in my private community. Number 4, do not over leverage. And what I mean by that is never invest more than you can afford to lose. Don't over leverage. You can have the right idea and still get liquidated because your leverage was too high. Surviving volatility matters more than maximizing every trade. So essentially, guys, do not over leverage. Do not risk too much. Understand proper risk management. Knowing that if I enter this trade, this can be wiped out. Like your risk should be very small. So like if a huge crash happens and the market goes against you massively, your account should not be down 50%, 30%. Like if there's a huge crash in the market, maybe your account is down 10%, 15%. Like the way to make money in this market is to preserve your capital so that when there are crazy times of crashes and everyone's getting liquidated and wiped out, you have the capital and the cash to buy the blood on the street. That's when you can make the most money. It's all about surviving for the long term. So do not over leverage your account. Do not revenge trade. All of these things kind of play into the same thing. This is very important. It's all about survivability. Number 5, never chase pumps. Be patient. If something already exploded, don't buy because of FOMO. Wait for your setup, pull back, retest, or just let the trade go. There will always be another opportunity. So number 5, very, very important. As a beginner, you're gonna wanna do this a lot. You're gonna wanna chase pumps. When you see a coin pumping, you're gonna wanna chase it. You have FOMO. Never enter because of emotion. That's what fear of missing out. That's emotion. You are fearful of missing out. Do never, ever, ever enter because you are afraid that it's gonna pump without you. Wait for a pullback. Wait for a pullback. A pullback will always come. A pullback will always come. And if it's the situation where the market is so incredibly strong, you catch a small little pullback and then you try to play the move. There's always going to be some type of small move. Don't chase when it pumps up. Wait for a small little pullback and then you get back in. That's the best way to trade something that's very, very strong. Number 6, risk management comes first. This is broader than stop losses, position sizing, portfolio exposure, leverage, correlation between positions, and how much you can lose in all one idea matter. Your job isn't to make as much money as possible. Your first job is to stay in the game. It's all about survivability. Your goal, your thing is to survive, because in the crypto market, if you guys follow people like me, you're in my community, or you follow some other traders out there who are good, you are going to find good trades. You're going to know when to enter. You're going to know when to buy. You're going to know when to sell. You're going to hear it. You're going to hear it. So your job is to survive so that you have the cash to buy the dip, so that you have the cash to buy the blood when it is on the streets, because that is the most profitable time. When everything is down to zero and things have crashed so much, that is the best time to buy. Because when everything is zero and nobody wants to buy, that's when the biggest gains come from that very level. But it takes years, it takes time. Of course, sometimes it can happen faster, but your job is to survive. So risk management is probably the most important thing as a trader, as an investor, is not risking too much on one trade. And that means when it comes to leverage trading, you don't want to be putting so much on a trade and so much leverage, so much sizing, so that one small move you're liquidated and wiped out. No, you want to be basically risking like 1% of your account, so that the market with that particular trade goes against you a lot. Your account's only down 1%, 3%, 4%, maybe 5% of a huge move. You don't want to be, if the market crashes huge, your account's down 50%, 90%. Like, you need to stay in the game. And that's the proper sizing you need to have. If the market crashes very big, your account should be down maybe 5, 10%, maybe 15% maximum, like a huge crash. That should be your proper sizing. And that means if you are already all fully allocated. Some people come in and they catch the great trades, they catch great entries, and they get wiped out in one single move. I've seen it over and over again. Do not be like that guy. Survive for the long run. Remember, in the investing space, slow is fast. Number 7, be extremely careful with meme coins, shit coins. Do not confuse gambling with investing. These coins can pump 500%, but then they can lose 90% to 100% in like literally 1 minute. If you speculate on them, treat the money as something you could potentially lose entirely. Do not make them the foundation of your portfolio. So a lot of people come in here and they start showing meme coins and they're doing this. Guys, meme coins, stay away from them. Only buy a meme coin if it has a very big market cap. It has the attention of everybody on Twitter. You don't want to try to get super early into these coins. 99.999% of them, basically 100% of them, go to zero within minutes or within the next 24 hours. Stay away from those. Stay away from those. Only trade meme coins like Dogecoin or maybe Cash Cat. Like this is the #1 Robinhood meme right now. Like the most popular coins. These coins will usually, especially in a bullish market, always recover. They will always recover, but do not chase them after they've already pumped up 50x, 100x, 2000x. You want to try to get into things and wait for there to be a crash. For instance, me and my community, we just bought this coin, Cash Cat. We ended up catching 200% gains on it. It was the most popular coin. It came out and it pumped. We did not chase it. It crashed all the way down, like 89%. I saw there was a lot of attention on Twitter. It was looking good. It started developing support. And me and my community bought it and caught a 200% move. This is an example of a good play. It's a good play. And it was still at a very large market cap. It crashed from 200 million to almost 40 million. It's still really aggressive, still very risky. With coins like this, you only want to put a very, very small percentage of your portfolio because they can crash very quickly, but they can pump very hard. So even if you have a small bit on there, you can make a lot of money. So these are the types of shit coins or meme coins that you want to stay away from. These are the coins that you want to trade. Very, very important. If you guys use these rules, they will help you to make a lot of money and to keep your money. This is the most important. Survivability, risk management, stay in the game for the long run. Do not lose your chips at the casino. And if you guys want to follow and copy trades that are profitable consistently over time, spot and leverage, join my community, join the free alpha channel. And if you guys are going to be trading crypto, make sure you guys are trading over on Blowfin. You're going to get 0 spot fees and also be trading over on Kraken. Kraken, this is where, I connect my bank. And from Kraken, I buy spot and I send it over to Blowfin. So this is going to be your bridge from your bank to crypto. And then you want to be trading over on Blowfin. You're going to have 0 spot fees. So the cheapest fees on Blowfin and the cheapest fees on leverage. So use Kraken, use my link for Kraken. This is where you get money, US dollars, or whatever currency you have into crypto. Then you send the crypto to Blowfin. Blowfin's where you trade it. Your profits you sell, send it back to Kraken, send to your bank. Or just hold for the long term in Kraken. This is how you run the crypto market. This is how I'm trading it, me and my community. If you guys got anything out of this video, consider giving this video a thumbs up. Make sure you are subscribed with notifications on because you're not gonna wanna miss my next video. And let me know your thoughts about this video in the comments below.